See 4.6. Debtors velocity 3 months is given, creditors velocity, stock turnover ratio, GP ratio, bills receivable and bills payable surprisingly is given, gross profit, fixed asset to turnover ratio is given. Closing stock of the period is 10,000 above the opening stock. You are required to compute sales, COGS, sundry debtors, sundry creditors, closing stock and fixed asset. Let us try out. As I've always told you, always start with the figures which are nominal. See, gross profit is given, gross profit ratio is given. If GP ratio is equal to GP divided by sales into 100, so if gross profit is 4 lakh and GP ratio is 25%, that means the sales is 4 lakh divided by 25%. Which is 16 lakhs rupees. So I'll put a small tick mark on the figures and formulas that I've already used. Stock turnover ratio. If nothing is given, I will assume it is on COGS. COGS divided by average stock. What is COGS? We can find out. Sales minus GP is nothing but COGS. Sales is 16 lakhs minus GP is 4 lakhs. So COGS will be 12 lakh rupees. So over here I can take COGS as 12 lakhs rupees. Average stock I don't know. Stock turnover ratio is 1.5. So average stock is 12 lakh divided by 1.5. 12 lakhs divided by 1.5. 8 lakh rupees is nothing but average stock. Now from this line, closing stock for the period is 10,000 above the opening stock. I will be getting both the answers, that is closing stock and opening stock, once I am having an average stock. Opening plus closing divided by 2 is equal to 8 lakh rupees. Also it is given closing stock for the period is the 10,000 above opening. So opening plus 10,000, opening, let me write down OP, plus 10,000 is equal to closing. So instead of closing, I can write down opening plus, instead of closing, I can write down opening plus 10,000 is equal to 16 lakhs. So 2 opening is equal to 15 lakh 90,000. So opening will be 15 lakh 90,000 divided by 2. 7 lakh 95,000 is opening stock. What will be closing stock? 7 lakh 95,000 plus 10,000 is equal to closing stock, which will be 8 lakh 5,000 rupees is nothing but closing stock. I've got opening stock and closing stock, one of which was my answer. We have found out sales, COGS. We have used those all ratios. All right, let us go to, we are having sales. Now from the information given, we cannot find out what are credit sales and cash sales. We can always take an assumption that all sales are credit. Assumed all sales are credit. What is the debtors velocity? Is the 3 months. So my debtors answer will be sales into 3 divided by 12. Sales is of 12 months. What is 3 months sales? Is nothing but debtors. We have done this n numbers of times even in working capital management. Sales is 60 lakhs into 3 divided by 12. So what is this? This is my debtors. No, they are not just my debtors. They are debtors plus bills receivable. Please understand, bills receivable are part of debtors. If you sign a bills receivable of 3 months, it will be calculated as debtors period. So this 4 lakh rupees is debtors plus bills receivable, and bills receivable period amount is 25,000. So debtors will be 4 lakh minus 25,000, that is 3,75,000. Once again understand, from credit sales, either debtors will be created, and if your debtors assign a bill and give it to you, they will be regarded as bills receivable instead of debtors. So this 3 months period always includes both debtors plus bills receivable. Sir, we have not done this in other questions. The reason is that we assume that bills receivable is 0. So we don't take into consideration bills receivable. In other formulas, we directly write down these are debtors. We have used this. Now we'll have to find out sundry creditors. For that, purchase is required. What is available? COGS is available. COGS can be also written as opening plus purchase minus closing stock. What is COGS available? COGS is 12 lakh rupees. Opening stock is also available. $7,95,000 plus purchase minus closing 8,05,000. So this will be 12,10,000 is equal to purchase. Assumed credit. Similarly, I can find out answer of creditors and bills payable as I have found out of debtors and bills receivable. Very simple. Purchase are of 12 months. Creditors period is 2 months. Will be nothing but my only creditors? No, creditors plus bills payable. The answer will be 12,10,000 divided by 6. 2,01,667 is creditors plus bills payable. What is bills payable amount? 10,000 rupees. This is 1,91,667 will be creditors amount. Next is we need to find out fixed asset. We are having fixed asset turnover ratio 4. Fixed asset turnover ratio is 4. What is fixed asset turnover ratio? In denominator, fixed asset will be written. In numerator, turnover will be written. Turnover we are knowing is 16 lakhs. Fixed asset. Fixed asset will be nothing but rupees. So I'm having all the answers which are required: sales, COGS, sundry debtors, sundry creditors, closing stock and fixed assets.